Monetary and fiscal policy is a module in our banking and financial services qualification. Fiscal policy deals with government spending, taxation, and deficit borrowing. Monetary policy has to do with inflation, money supply, and interest rates. These policies have developed over a long period of time. The aim behind this video, being part 1 in a series of 6, is to cover the historic development and origins of these policies. This pre-work will allow for active discussion and full participation during our actual workshops. In part 1, we cover developments in England from the time that the Britons found themselves under the control of Rome in 50 BC until the establishment of the Bank of England in 1694 AD. A lot of historic events are covered. Note, however, that these historic events must be considered in the light of our main theme, the development of fiscal and monetary policies. The historic facts, wars, succession of kings and queens, and religious developments all molded and formed our modern concepts of the role of the state and the function of a central bank. Knowing the background will enable you to constructively question modern-day developments. Look for a pattern, a pathway that leads to what we term today fiscal and monetary policy. Part 2 covers developments in the United States of America. We start with the Portuguese and Spanish colonization of the Americas and end with the establishment of the Federal Reserve System. Part 3 brings us home to South Africa. This section starts with the establishment of the Dutch VOC, the early years when the Cape of Good Hope served as a halfway station to the Indies, the first financial crisis in South Africa, the establishment of the first banks right up to the time when the South African Reserve Bank opened its doors on 30 June 1921. Part 4 covers the rise and fall of the gold standard and how events during this period of time caused, from an economics perspective, the First and Second World Wars. Part 5 shows how 44 countries joined the Bretton Woods Conference in the USA and the attempts made there to prevent another world war. The constant sparring between John Maynard Keynes, representing England, and Harry Dexter White, representing the American interest, is especially entertaining. Part 6 considers the major international monetary institutions that operate in the world today. The emphasis is on the IMF, the World Bank, and the World Trade Organization. I trust that you will find this presentation interesting and that it places you firmly on the road to understanding monetary and fiscal policy. This is the area that Rome controlled at the height of its power in 117 AD. But our story starts 173 years earlier. While Pompey was expanding the Roman Empire in the east, Caesar was doing the same in the west. In 56 BC, Julius Caesar expanded Roman control over Gaul, a region of Western Europe that covers present-day France, Belgium, Switzerland, the Netherlands, and parts of Germany. Gaul consisted mostly of Celtic tribes. Julius Caesar conquered Gaul in 58 BC. Given its cultural, political, and economic links with Gaul, Britain became a refuge for some of Caesar's Gaulish enemies. The mineral and agricultural wealth of Britain also made it a tempting prize. In addition to competing with Pompey at the time, Caesar wanted to punish the Celtic tribes in Britannia for assisting the Gauls in their fight against Roman expansion. Caesar was turning his attention to Britannia, as it was known to the Romans. Julius Caesar faced strong opposition from the Celtic-speaking Britons when he invaded Britain in the summer of 55 BC with a force of about 10,000 men. But this was mostly an expedition force. One custom that the Briton warriors became well known for was painting themselves blue before going into battle. Caesar's first expedition wasn't very successful. Britain was mainly an agricultural society that traded with Gaul and mainland Europe. There were strong class divisions among the Britons, with a warrior aristocracy ruling over peasants that made up the majority of the population. Britain was also a major supplier of tin. Cornwall in the southwest of the island, with a Celtic-speaking population, was mostly known for fishing and tin. Mediterranean traders, mostly Phoenicians, visited Cornwall possibly as early as the 6th century BC and gave Britain its name, the Islands of Tin. Julius Caesar returned the following year in 54 BC with a force of 25,000 soldiers and managed to cross the Thames, where he defeated Cassivellanius, a Celtic chieftain. The Celts promised to pay tribute to Rome, and Caesar left Britain. When Julius Caesar invaded Britain in 55 and 54 BC, the British tribes that he encountered did use coins, but not exactly as money in the sense that we understand it today. The coins looked like the coins minted by Philip II of Macedon, the father of Alexander the Great. In the middle of the 4th century BC, Philip II acquired gold and silver mines in Thrace. He minted vast quantities of gold coins, referred to as staters, to hire mercenaries, including the Celts, in order to obtain control over the rest of Greece. Through these mercenaries, many of these gold coins made their way to the north and the west of Europe, including Gaul, where they were imitated and used by local tribes as gifts and prestige objects. Coinage did not immediately lead to monetization everywhere it spread. Rome initially used barter and commodity money. However, after Greece fell to Rome, the Romans adopted the Greek-style coinage as the basis for monetary transactions. Roman soldiers were also paid in coin. The Roman system was a more durable and coherent system and would eventually dominate all others. Rome continued with this approach in Britain. Bearing in mind that the value of coins depended on the actual gold and silver content, the minting of coin became the exclusive prerogative of the state. Only the state could mint coins as a measure to confirm both the metal content and value of the coin. The Roman Emperor Constantine, for example, passed a law to the effect that anybody caught minting coins would lose all his property to the state and would be burnt alive. People that owned silver and gold would take it to the state mint, where it would be coined. The mint would cut the metal into the appropriate sizes and strike a symbol on the sides of the coin to guarantee the metal content and value. In exchange for this, the mint would charge a fee to cover the minting costs and as a tax income for the state. By about 200 AD, Roman money was defined as coins minted in a prescribed format by the state and with a set value. Claudius returned in 43 AD, and that is when the actual conquest of Britain began, an occupation that lasted for 400 years. England became a province of the vast Roman Empire. In addition to building forts and camps, they also built roads to connect them. the Romans developed the trade and agriculture of the island as well. The most serious revolt against Roman rule occurred in 60 AD when the Iceni, a tribe in East Anglia under the leadership of Boudica, sacked Verulamium, Colchester and London. A statue of the legendary Queen and her daughters was erected in 1902 in London, facing Big Ben and the Palace of Westminster. Although the Romans tried for over a century, they just could not conquer an area that they called Caledonia. In the end, the Romans built a strong wall along the border. This wall was known as Hadrian's Wall, named after the Roman emperor who planned it. The intention was to keep the Celtic-speaking raiders, called Picts by the Romans, from north of the wall out of Roman territory. Hadrian's Wall basically became the border between England and Scotland. At the beginning of the 5th century, Rome itself was being attacked by the barbarians, approaching from the north and the east. As a result, Rome withdrew its forces from the colonies in order to protect Rome. Rome withdrew from Britain in 409 AD. The Visigoths eventually sacked Rome in 410 AD. When the Romans left Britain, the circulation of Roman currency also broke down. The market exchange collapsed without a viable alternative. Coins were no longer produced after the Roman withdrawal. Coins were in any event viewed more as treasure rather than a medium of exchange. Britons used mostly a barter economy and returned to a tribal culture. The Romans left the Roman British and the Romanized Celts behind to fight alone against the Celtic Irish and the Scottish Picts. In 449 AD, the Britons had to contend with another invading force, the Germanic Angles, Saxons and Jutes. If King Arthur did exist, and this is not certain, he was probably a Briton from Roman descent fighting these Anglo-Saxons. It became convenient to call these Anglo-Saxon invaders the English. The Anglo-Saxon takeover took 2 centuries and led to the creation of England. 7 kingdoms were established by 850 AD. Kent, Essex, Sussex, Wessex, East Anglia, Mercia and Northumbria. After much infighting for supremacy, they were eventually consolidated into 3 large Anglo-Saxon kingdoms, Northumbria, Mercia and Wessex. King Offa of Mercia became one of the most powerful Anglo-Saxon kings at the time. He became king after a civil war and gained control of London and the strategic centre of the country, Mercia, Sussex, Kent and Wessex. Offa was one of the few Anglo-Saxon kings to mint gold coins. Offa's gold coins were modelled on the Arabian dinar. The dominant currency of Anglo-Saxon England was the silver penny, known as the sciata, and Offa's gold coins were probably minted for foreign trade or tribute rather than circulation. King Offa also built a dike to establish the border between England and Wales. King Offa died in 796 AD, and the England of his day did not survive long after him. The destiny of Anglo-Saxon England changed again with the arrival of the Vikings from Scandinavia. Divided into 3 groups, the Swedes, the Danes and the Norwegians. The Danes led the invasion of England and the Norwegians led the invasion of Ireland and Scotland. It started off as smash and grab raids mainly in the east and the north, those areas closest to the North Sea. 3 Viking ships attacked the monastery of Lindisfarne on the coast of Northumbria in 793 AD. The Viking invasion led to the end of Northumbria, and it became a land of constant warfare between Britons, Scots, Danes, Norwegians, and Anglo-Saxons. In 851 AD, a fleet of 350 Viking ships arrived on the Thames near London. The Vikings established permanent bases in England and began to spend the winter seasons in England. The Vikings had little interest in Wales, a relatively poor area. Celtic culture remained strong in Cornwall and Wales. King Alfred of Wessex led the English recovery from the Viking invasions. He fought a guerrilla campaign and managed to expel the Scandinavians from Wessex. He unified much of southern and western England. Economic activity recovered under Alfred's reign. He issued charters that granted economic privileges to towns such as the right to hold markets. London, at the time, was by far the largest town with a population of about 10,000 people, while smaller towns had mostly between 2,000 and 3,000 people. Alfred also built a navy to defend Wessex. Alfred eventually became the first king of England, and he is the only monarch in English history to be given the title the Great. It is evident that the basis of Great Britain, as we recognize it today, was established during this time. England, Ireland, Scotland, and Wales. Being an island, Ireland managed to retain its own Celtic culture, and so did the Picts in Scotland north of the Hadrian Wall. The Welsh in the west, separated from England by King Offa's Dyke, also maintained their own culture. The Anglo-Saxon period is listed as 410 AD to 1066 AD. The last great Saxon king was Edward the Confessor, and a new force would yet again influence the future development of England, namely the Normans. On 14 October 1066, the Battle of Hastings took place between the Anglo-Saxons and the Normans. Edward the Confessor, King of England, died in January 1066 without an heir. The Witan proclaimed Harold II, from the powerful Anglo-Saxon family of Godwin, to be king. William, the Duke of Normandy in France, however, claimed that Edward the Confessor had offered him the kingship of England. Now, some background is required here. Rollo was a Viking who constantly attacked France many years before in the early 1900s. The King of France eventually gave Rollo an area of land between two rivers in the northern region of France that became known as Normandy. In exchange for this, Rollo undertook to stop raiding France and to protect France from other Viking invaders. By 1066, Normandy was totally French, and William, the Duke of Normandy, contested the crown of England based on his claim that Edward the Confessor had offered the kingship to him. During the battle, Harold and most of the fighting aristocracy of Anglo-Saxon England were killed. William from Normandy was crowned King of England. The conquest was followed by a massive redistribution of land, the greatest in all English history, and power along with it. William the Conqueror, as he became known, was the richest single landowner in England, owning almost 18% of the land. William the Conqueror wanted to prevent the development of large, semi-independent territorial areas as occurred during the Anglo-Saxon rule. During Norman rule, the kings distributed the land in much smaller parcels. At the same time, the Normans imposed a very tight feudal system, where the lords had to swear allegiance to the king, and all land was held under a feudal system, in return mostly for military services. The aristocracy was very small. About half the income of the country went to around 200 barons. The other half went to the king and the church. The Normans built hundreds of castles, protected by mounted knights all over England. The castles, initially wooden structures but later replaced by stone, became the nobility's military strongholds. William the Conqueror built one of the first Norman stone castles in London in 1078 to control his new capital city. Known as the White Tower, it would later become the Tower of London. The Normans, especially Henry I, established institutions to centralize justice and finance, such as the Exchequer around 1110, to handle the royal accounts. The Jewish community in England operated as moneylenders to the king and private individuals. The law of the church did not allow Christians to lend money out at interest, so the Jews fulfilled this economic need. Under the reign of Henry II, English law and judicial procedures were further developed. The common law, a combination of Anglo-Saxon and Norman precedents, would become one of the world's great leading systems. Richard I succeeded his father Henry II to the throne. Richard I's main ambition, however, was to join the Third Crusade after Saladin captured Jerusalem in 1187. The Crusades, a series of religious wars between the Christians and Muslims, was for control of the holy sites in and around Jerusalem, considered sacred by both groups. In all, 8 crusades occurred between 1096 and 1291. Richard I sold sheriffdoms and other offices to finance his crusade. He arrived in the Holy Land in June 1191. Richard, later known as Richard the Lionheart, never reached Jerusalem. After a year's stalemate, Richard made a truce with Saladin and started his journey back home. Bad weather on the way home drove Richard's ship ashore near Venice. He was imprisoned by Duke Leopold of Austria and handed over to the German Emperor Henry VI, who demanded 150,000 marks for Richard's release. This amounted to 100,000 pounds or 33 tons of silver. Richard I was succeeded by his brother John. Although highly intelligent, King John was untrustworthy and cruel. The reign of King John also provides the backdrop for the stories around Robin Hood. War broke out between England and France during the reign of King John, a war that King John lost. The result of this was that King John also lost Normandy, that part of northern France that had been under English control since the time of William the Conqueror. King John needed money. He introduced unfair taxes, confiscated lands, and committed a variety of unfair acts that resulted in a revolt by the barons. King John was eventually forced to sign the Magna Carta on 15 June 1215. The Magna Carta contained 63 rules aimed at stopping the king's abuses and to control spending in the land by requiring that new taxes could only be imposed with the consent of a council of barons. 25 barons were appointed to watch the king and to ensure that he obeyed the new rules. King John later revoked the Magna Carta, which resulted in a civil war between the barons, supported by France, and the king. The war ended when King John died and his 9-year-old son, Henry III, became king. A revised version of the Magna Carta was reintroduced and accepted. Later in his life, Henry III attempted twice to recover his interests in France, leading to war again with the French. After losing the war, Henry eventually acknowledged the loss of his French provinces in the Treaty of Paris, signed in 1258. This war cost money. Another crisis in 1258 would lead to the establishment of a parliament as basically provided for in the Magna Carta. In the meantime, Henry became involved in a war in Sicily on the side of the Pope. Henry also guaranteed the papal debts incurred during this war in Sicily. When these debts became exorbitant, Henry announced that he would not pay these debts. The Pope, in turn, threatened to excommunicate Henry. A group of barons intervened and demanded that Henry agree to some reforms before the money was granted. The Parliament, as an institution in the way that we understand it today, came into general use in around 1264. The late Middle Ages was a difficult time for England. The period was marked by external and internal war between England, Scotland, Ireland and Wales, civil discord, plague and economic crisis. The kings of England and Scotland fought a series of bloody wars, resulting eventually in Scotland's independence. During this time period, the role of Parliament started to develop further. Initially, the king would call parliaments from time to time to raise taxes or to consider grievances and petitions. Since petitions often involved legal disputes, a parliament was in many ways a court of last resort and was usually referred to as a court, the High Court of Parliament. The day-to-day government was done by the king, his advisors, and his bureaucracy. King Edward I, also known as Edward Longshanks and the Hammer of the Scots, needed money, but instead of approaching Parliament, he targeted the Jews in England and their wealth. In 1290, Edward expelled the Jews from England. Jews were not allowed to live openly in England again until the mid-17th century. In the absence of the Jews, the king later on had to turn to alternative sources of credit, and he approached the Italian banking houses. Lombard Street in London became the center of English banking for centuries, named after the financiers from the Italian region of Lombardy. The long reign of Edward III was marked by plague. The Black Death of 1348 and 1349 AD that killed about 40% of the English population, as well as the beginning of the 100 Years' War between England and France from 1337 to 1453, and the rise of Parliament as a governing body. By the way, Scotland fought on the side of the French. During the Battle of Agincourt in 1415, thousands of French knights were killed by English longbowmen. The need for increased taxation strengthened Parliament as a tax-approving institution. After 1327, representatives of counties and towns were invited to every Parliament, eventually forming the House of Commons. The House of Lords, however, continued to dominate politically. Civil war broke out again between 1455 and 1485, known as the War of the Roses, named so because of the white and red roses that served as emblems of the two houses. The House of Lancaster and the House of York were contending for the throne of England. Although the House of York won, they did not manage to rule England for long. After yet another civil war, Henry Tudor became King Henry VII. This was the start of the Tudor rule in England. Henry VII was known for his love of money and lack of interest in military glory. His foreign policy basically involved being friends with everybody. Henry VII also showed a keen interest in financial transactions, inspecting the books and receiving cash in the form of minted gold, silver, and bullion. He did not increase taxes, which would have required the consent of Parliament, but he did enforce customary dues. For example, the king was deemed to be the guardian of minor children should the parents die, and he restructured the manner in which the funds belonging to these minor children were managed. He also used forced loans, requiring wealthy Englishmen to lend money, known as benevolences, to the king. Although he was considered greedy, he actually left a surplus in the treasury when he died, something almost unheard of. Major changes were introduced during the reign of his son, Henry VIII. Henry, as the younger brother, was actually not expected to become king. His older brother, Arthur, was the designated king. But Arthur died, which promoted Henry to succeed his father as king. Henry VIII became king on 21 April 1509 at the age of 17. With the permission of the Pope at the time, Henry VIII also married the Spanish Catherine of Aragon, his brother's widow. After 7 years of marriage, they had a daughter, Princess Mary. Henry VIII quickly spent whatever surplus was in the treasury. He invaded France in the summer of 1513 to assist the Pope, who had a dispute with France over some papal states in Italy. In addition to waging war, Henry VIII also spent lots of money on clothes and ships, in line with his plans for a naval expansion. Both Henry VIII and Catherine were devout Catholics. Because Catherine failed to give him a son and heir, obviously according to Henry VIII, he wanted to divorce her. His argument was that he should never have married her because the Bible prohibits a man from marrying his brother's wife. The Pope refused to grant this request for a divorce, and this resulted in tension between Henry VIII, the Pope, and Spain. In 1532, Henry VIII broke away from the Catholic Church and established a church in England, with Henry VIII himself as head of the church. Henry VIII was now both ruler of the land politically as well as head of the church spiritually. He promptly granted himself the right to divorce Catherine and to marry Anne Boleyn. They had one child, another daughter, Princess Elizabeth. But Henry VIII went even further. He ensured that Parliament passed the Act of Supremacy in 1534, which required all subjects to swear an oath to him as supreme head of the church. A refusal to do so was seen as treason. The punishment was death. While his fight with the Catholic Church carried on, and as the Protestant faith started to grow in England, Henry VIII had 4 more wives. His marriage to Jane Seymour resulted in the birth of a son, Edward, but Jane Seymour died shortly after the birth. 3 more wives followed: Anne of Cleves, Catherine Howard, and Catherine Parr. Henry VIII died on 27 January 1547 as head of the state and the church and the father of 3 children, Mary, Elizabeth, and Edward. The 9-year-old Edward, raised Protestant, was proclaimed King of England and ruled as Edward VI. He died soon afterwards, and Mary, raised Catholic, became Queen. She, however, died on 17 November 1558, and Elizabeth, raised Protestant, became Queen. Elizabeth I was 3 years old when her mother, Anne Boleyn, was beheaded, and she was 13 when her father, King Henry VIII, died. She was never close to him, and having witnessed all his marriages, and especially how her mother was treated, Elizabeth I vowed never to marry, and she never did. She insisted that she was married to England, and became known as the Virgin Queen. The treasury was empty. The English currency was regularly debased, meaning that the silver and gold content of coins were constantly reduced. The value of English coins decreased, resulting in price increases. More coin was necessary to buy goods. Trade also suffered as a result of the debasement of the currency. England traditionally hoarded gold and introduced copper coins into circulation to allow ordinary citizens to pay for smaller day-to-day transactions. Foreign traders, however, refused to accept the debased English currency and insisted on payment in gold, resulting in a substantial loss of gold from the treasury when England was compelled to pay its debts in gold. Since the time when the Greeks and the Romans first minted coins, it was always accepted that it was the absolute prerogative of the state to determine the content and value of coins. This concept became an issue when the Privy Council had to decide the case of Gilbert versus Brett. Gilbert sold goods to Brett for £100. Between the date of the sale and the due date for payment, a proclamation of Elizabeth I called for the withdrawal of the old silver coinage and for it to be replaced with a new coinage struck from debased silver. The proclamation also decreed that the new currency had to be tendered and accepted at its nominal legal value. Brett tendered £100 in the newly minted coins when the debt became due for payment. Gilbert, however, rejected the tender and demanded payment in the old coins, or at least enough new coins to give him the equivalent amount of silver. The Privy Council held that Brett had made a good tender when he offered the new debased coins, and that Gilbert was in contempt of the Queen's prerogative by rejecting the new coins. It was ruled that the Queen had the right to make coins of whatever metallic compositions she pleased and to fix their value as a unit of account. The Privy Council also confirmed that the sovereign could change the money standard without requiring the consent of Parliament first. Later, in 1561, Elizabeth decreed for all debased currency to be withdrawn from circulation and replaced with freshly printed coins of gold and silver. Prices stabilized, and both the economy and trade improved. In 1566, the London Royal Exchange Exploration was established to increase the investment in ships, an initiative started by Henry VIII. At the time, Spain was still the dominant naval power. England needed ships for trade, exploration, fishing, and warfare. Under Elizabeth, England achieved this. England produced a versatile fleet of ships, and although the ships were smaller than the Spanish ships, they were more maneuverable. The economic growth during the reign of Elizabeth was not financed from taxes. With a poor and struggling population, taxes would have been very unpopular and would require the approval of Parliament. Elizabeth did not care for parliaments and summoned them as seldom as possible. The source of funds to finance the growth came from the revenues from Crown land, custom duties, and Elizabeth's own personal fortune. Remember that the kings and queens of England did, since the Norman invasion, own large amounts of land. When war broke out between the Dutch and Spain, Elizabeth supported the Dutch. She also allowed privateering to take place. This was basically state-sanctioned piracy, in terms of which English ships could attack Spanish ships and take their cargo. It goes without saying that there was tension between England and Spain at this time. Sometime after 1570, England became predominantly Protestant. Only Protestants believed that Henry VIII's marriage to Anne Boleyn was valid, and that Elizabeth was accordingly the rightful heir to the throne. Whatever her personal preferences were, Elizabeth tried to mend the divisions between the Catholics and the Protestants. She introduced a middle way that became the distinctive approach of the Anglican Church. Notwithstanding Elizabeth's attempts to mend the divide between Catholics and Protestants, Pope Pius IV declared Elizabeth to be an illegitimate monarch and to whom her Catholic subjects owed no allegiance. With Elizabeth I not having children, she did not have a direct heir and successor. Her closest heir was Mary, Queen of Scots, the granddaughter of Margaret Tudor, who was the elder sister of Henry VIII. Mary, Queen of Scots, was a Catholic, and she married a Catholic. The couple had a son, James. Elizabeth refused to publicly name Mary, Queen of Scots, as her heir, fearing that this could lead to a plot to replace her with a Catholic queen. Elizabeth appointed Francis Walsingham as Secretary of State and her spy master to look for such plots, and he did indeed uncover a plot involving Mary, Queen of Scots, directly. Elizabeth signed an execution order and Mary, Queen of Scots, was beheaded. Prior to Mary's execution, Elizabeth gave her an undertaking that she, that is Elizabeth, would name Mary's son, James, as her heir. In response to Mary's beheading, the Pope asked Spain to invade England. In the light of the tension between England and Spain, Philip II of Spain did not hesitate to comply. In July 1588, a Spanish fleet consisting of 130 ships carrying 2,500 guns, 8,000 seamen and almost 20,000 soldiers arrived in England. The aim was to conquer the country and to convert it from Protestant back to Catholic. Although outnumbered, the English fleet with their smaller but more maneuverable ships beat the Spanish armada. A massive storm also helped to destroy a number of Spanish ships. Spain withdrew. The war with Spain was costly and took its toll on the English economy. In addition to a rebellion in Ireland and poor harvests, prices increased sharply. This was the situation in England when Elizabeth I died on 24 March 1603, and when James I of Scotland, the son of Mary, Queen of Scots, became the King of England. The death of Elizabeth I brought about the end of the reign of the Tudors that started with Henry VIII, to be replaced with the reign of the Stuarts. King James I unsuccessfully attempted to combine England and Scotland as Great Britain. Like Elizabeth I before him, James I was very tolerant as far as religion was concerned, and a relative peace existed between Catholic and Protestant. He also sponsored the King James Version of the Bible. James's major political problems involved finances, both long and short term. The English tax system was outdated and unable to raise the money that the state needed. Tax was mainly in the form of customs and tax on land. The landowners who made up the majority of the House of Lords and the House of Commons often blocked tax increases. Land taxes were collected by local landowners who were reluctant to rate each other's properties at full value. Although James's rule was mostly peaceful, there was an attempt on his life when Guy Fawkes and some fellow Catholics attempted to blow up the king and Parliament on the 5th of November 1605 in what became known as the Gunpowder Plot. The rule of his son Charles I was a lot more turbulent. Charles believed in the divine right of kings, resembling the ideas of King John before Magna Carta. Charles attempted to rule without Parliament. England also got involved in another war with Spain and France during the 30 Years' War. Charles also introduced an old tax called ship money, which was very unpopular. Conflict with Scotland followed between 1639 and 1640, known as the Bishops' Wars. Desperately in need of money to finance the Civil War, and with the state coffers empty, Charles ordered in June of 1640 that nothing should be paid out from the mint until further notice. Remember, people were still taking their gold and silver to the mint to have it struck into coins. So Charles effectively confiscated the money still at the mint. He did, however, decree that merchants who had deposited the silver to be coined would receive 8% interest on these forced loans. This encouraged people to rather keep their gold and silver with the goldsmiths. The goldsmiths were not allowed to strike coins, but they could keep gold and silver already minted into coins, as well as bullion, and issue receipts in exchange. Upon presentation of the receipt, the goldsmith would return the coins and bullion to the owner. By 1685, the shops of the goldsmiths in Lombard Street made all the payments in coin. Traders and merchants received paper, notes and drafts issued by the goldsmiths, effectively making the goldsmiths the treasurers of the whole city. The Crown was also active in the market for short-term debt. The Crown, in anticipation of monetary receipts like taxes or the spoils of war, issued interest-bearing paper for goods and services. This interest-bearing paper was issued in denominations as small as £1, exchangeable for coin. William Shaw called these orders England's first government paper money. A great Catholic revolt occurred in Ireland in 1641. This in turn caused a civil war in England over the question of whether the king or parliament should control the army raised to fight the Irish rebels. The land was divided between Protestant and Catholic, and between the royalists and the parliamentarians. King Charles I was defeated by the parliamentarian army under Oliver Cromwell. King Charles I was captured and executed in 1649. The victory of the English Parliament over the king was followed by the victory of England over Scotland and Ireland, in what became known as the War of the Three Kingdoms. For the first time in history, the British Isles were a political and administrative unity ruled from London. This, however, did not last long. Oliver Cromwell overthrew Parliament in 1653 and ruled under the title of Lord Protector of England, Scotland and Ireland. Cromwell introduced military rule in 1655. He divided the country into 12 regions and placed each region under the control of a major general. The modern banking system did not exist in Britain until Cromwell's regime. The English banking system started around 1660 to 1662. Before that, in the words of Macaulay in his book History of England, merchants had their strongboxes and paid out honest coin on demand in the form of gold or silver currency. Now, goldsmiths started to give receipts for gold and silver held by them, and these receipts were then passed around as payment, and in this manner the cheque and the banknote were born. Cromwell died on 3 September 1658, and like a king, he was succeeded by his son, Richard Cromwell. His stay in power, however, lasted only 9 months until General George Monk, who fought for the king during the Civil War, marched his army from Scotland to England and spoke out in favour of restoring the Stuart monarchy. And that settled the issue. The monarchy would return. The Restoration of 1660 restored Charles II as king, the Church of England, and the House of Lords. There was also a return to multiple kingdoms: England, Ireland, and Scotland. Disasters during the Restoration include the plague of 1665, with over 100,000 deaths, a quarter of the London population. The Great Fire of London in 1666 destroyed much of the city's wooden houses. The problem of succession rose again. Charles II and his Portuguese princess Catherine of Braganza had no children. That made James, the brother of Charles II, his heir and next in line to the throne. The problem, however, was that James was a Catholic. This caused what became known as the Exclusion Crisis of 1678 to 1681, and led to the establishment of two political parties that would influence English politics for years to come. The Whigs wanted to exclude James from succeeding Charles II, and the Tories wanted to see James succeed his brother, irrespective of the fact that James was a Catholic. Eventually the Tories won, and James succeeded to the English and Scottish thrones with no difficulty as James II. James II's main political goal was to get legal equality for his fellow Catholics, but this approach offended many, especially the Church of England. When James II and his wife, the Italian Princess Mary of Modena, had a son, the new prince, also named James and raised as a Catholic, would introduce a line of Catholic successors. This is when the Protestants asked William of Orange, a staunch Protestant, to invade England in 1688. William of Orange was a Dutchman, but he was also married to James II's older daughter Mary, making William of Orange the son-in-law of James II and heir to the throne if it was not for the birth of the new prince. The invasion was successful, and James II was allowed to escape to France. The invasion by William of Orange became known as the Glorious Revolution. Parliament was called, and it was decided that James II had abdicated by fleeing the country, and the crown was offered to William and his wife Mary, something that had not happened in English history before. To protect the rights of so many different interested parties, Parliament enacted a Bill of Rights into law in 1690. There was also a major change in the coronation oath, requiring the king or queen to include a promise to govern according to the statutes of Parliament. William of Orange became King William III of Britain. The Glorious Revolution brought about a constitutional monarchy. The 9 Years' War followed from 1688 to 1697 between France on the one side and the Dutch Republic, England, Spain, Portugal, and the Holy Roman Empire on the other side. The cost of the war more than doubled during the 1690s if compared to the 1680s. Taxation increased to around £4 million a year by the mid-1690s, but there was still an annual shortfall in the region of £2 million. The political economist Charles Davenant remarked at the time that the whole art of war is, in a manner, reduced to money, so that the prince who can best find money to feed, clothe, and pay his army, not he that has the most valiant troops, is surest of success and conquest. A proposal to fund the war debt through a new bank, the Bank of England, was accepted. The Bank of England was established to fund the war debt. The bank would receive a capital investment in the form of cash, gold and silver, of £1.2 million from subscribers. The capital amount invested in this manner would not be repaid to these investors, but they would receive 8% tax-free annual interest on their investment. The legal limit for interest was 6% at the time. The bank would also receive a £4,000 annual management fee. The charter in terms of which the bank was incorporated also allowed the bank the right to conduct general banking business, including issuing paper money, taking deposits, lending on mortgages, and dealing in bills of exchange, as well as gold and silver. The charter was, however, guaranteed for only 11 years. The bank would then lend this £1.2 million in the form of notes and bills to the state to fund the war. The state would in turn issue IOUs to the bank to confirm the debt. The bank raised the required £1.2 million from 1,268 initial subscribers, mostly from the mercantile middle classes of London. 3 days after the subscription closed, on the 5th of July 1694, an announcement appeared in the local gazette calling all subscribers who invested £500 or more to meet on the 10th at 8 a.m. at Mercer's Hall. Subscribers were required to swear that their investment was their own proper money. They were also requested to propose the names of 2 persons that they thought fit to act as the governor and deputy governor of the new bank. After the election that followed, Sir John Hublin, a £10,000 subscriber, was appointed as governor, and a Godfrey, an £8,000 subscriber, became deputy governor. 24 of the subscribers were then chosen as the bank's first set of directors. Governor, deputy governor, and most of the directors then assembled at Mercer's Hall about 2 weeks later, on the afternoon of Friday, the 27th of July, for their first court. It is important to note that the Bank of England was not yet the state bank. It was merely a bank intended to fund a war. Although the original charter granted to the bank was only for 11 years, it was extended 9 times until 1844, when the bank was granted a perpetual charter. By 1751, the activities of the bank extended beyond just funding wars, and all public debt was reorganized in a single pool. And in this manner, the Bank of England became the government's bank. Goldsmiths started to deposit gold with the Bank of England as well. This introduced the Bank of England to a new role, namely lender in last resort. It was expected that the bank would provide these different goldsmiths that eventually became rural banks with gold as and when required to repay their depositors. The Bank of England started off as a private bank in 1694 to fund a war, but would eventually become Great Britain's central bank. It must be noted, though, that the first real mention of a central bank as we know it was in 1802, when Henry Thornton referred to it in an inquiry into the nature and effects of paper credit in the United Kingdom. An Act of Parliament in 1844 effectively gave the Bank of England a monopoly to issue banknotes. In 1870, the Bank of England officially accepted the function of lender in last resort. This narrative started with the emperor or king having the sovereign and exclusive power to mint coins and to change the monetary standard by altering the metallic value of the coinage or by raising or lowering its valuation in monetary units. The sovereign had the exclusive right to strike coin and give it a value. Toward the end of the 7th century, money would be issued under order of Parliament, and no longer exclusively the prerogative of the king or queen. The political revolutions brought about a profound financial revolution as well. It resulted in a rapidly growing securities market to trade in long-term government debt and established the basis for the banking and insurance industry. In 1691, Edward Lloyd moved his coffee house from near the river to Lombard Street in order to be close to the General Post Office, a prime source of shipping intelligence. This would result in a bank, insurance, merchant relationship that would mold the financial sector for centuries to come. On the 250th anniversary of the Bank of England in 1944, Sir John Clapham, a celebrated historian of the bank, started his opening speech with the following words: "The establishment of the Bank of England can be treated, like many historical events both great and small, either as curiously accidental or as all but inevitable." These words ring true when considering the colourful history covered here, leaving us with the same thought: was it luck or was it inevitable? The foundations of the British Empire were laid in 1496 when King Henry VII started to build a fleet following the successes that Spain and Portugal achieved in overseas exploration. This project to build a fleet continued under Queen Elizabeth I. The British Empire was for more than a century the foremost global power. By the early 1900s, it controlled and influenced the lives of almost a quarter of both the world population and the Earth's total land area. This influence would leave its mark on the constitutional, legal, linguistic, and cultural development of many countries. At the peak of its power, it was described as the empire on which the sun never sets, as the sun was always shining on at least one of its territories. Consider the following discussion questions. 1. What seemed to be the main purpose behind fiscal policy during most of England's history? 2. How did monetary policy develop over the time period covered here? 3. What was the main focus of monetary policy? 4. What is public debt? 5. Should the state own the central bank? 6. What is money? 7. How did the concept of money change over the time period covered here? 8. Imagine that you are given the opportunity to go back in time as an economics advisor to one of the kings or queens mentioned in this video. Which king or queen would you choose? What advice would you give? How do you think this would have changed the course of events? 9. How do you think that the past events covered in this video contributed to our modern understanding of fiscal and monetary policy? 10. Which is more important, monetary or fiscal policy? Why do you say so? 11. What are the main lessons from a monetary and fiscal policy perspective that you identified during this video? 12. If you were appointed as the registrar of a central bank, what would your main monetary policy approach be?